His name is Michael, and today he did not trade. He sat at his desk for 4 hours. He watched the London session open. He watched price move. He identified two potential setups, studied them carefully, ran them through his criteria, considered the context of the higher time frame, and he decided both times that the conditions were not quite right, that the setup was close but not clean, that the edge was marginal, and marginal edges, taken repeatedly, are how accounts slowly erode. So he watched and waited, and by the end of the session, neither setup had played out the way he had initially thought it might. One reversed immediately after the level, the other chopped sideways for 2 hours and closed flat. He closed his charts, made a note in his journal, two setups considered, both declined, reasons documented, and went for a walk. He made no money today. He also lost none. And here is what matters. Michael has been trading profitably for 3 years. His monthly win rate is not exceptional. His average risk to reward is not remarkable. His strategy is not exotic or proprietary or secretly brilliant. But Michael has one quality that the vast majority of retail traders never develop. One discipline that took him longer to build than any technical skill, longer to master than any analytical framework, longer to trust than any indicator or system he has ever used. The ability to do nothing. To sit in front of a moving market, feel the pull of it, feel the restlessness and the boredom and the nagging sense that he should be doing something, and choose with full deliberate intention not to trade. This video is about that skill, where it comes from, why it is so difficult, what the Stoics understood about it 2,000 years ago, and how you can begin to build it starting today. Because the best trade you will ever take might be the one you never took at all.
There is something deeply uncomfortable about stillness when action feels available. This is not a trading problem, it is a human problem. It is wired into us at a level so fundamental that most people never notice it operating. They simply feel its effects as a constant low-grade pressure to be doing something, anything, to be engaged, productive, active, responsive. Psychologists call it action bias, and it has been studied in many domains, from football goalkeepers who dive unnecessarily on penalty kicks when standing still would statistically be the better choice, to emergency room physicians who order more tests than are medically necessary simply because doing something feels more responsible than watchful waiting, to investors who trade far more frequently than their strategies require, simply because holding a position and doing nothing feels passive, feels like giving up control, feels like the market is happening to them rather than them participating in it. In every case, the data tells the same story. Action taken to satisfy the emotional need to act rather than because the situation genuinely calls for it produces worse outcomes than disciplined inaction would have. But knowing this does not make the feeling go away. Michael knows it. He has known it for years, and there are still sessions, even now, 3 years into profitable trading, where he sits at the screen and feels the pull, the restlessness, the boredom that masquerades as analysis. The way an average setup starts to look better and better the longer you have been watching the market without a trade. He calls it the drift, the slow, almost imperceptible lowering of standards that happens when the market has been quiet and the hands want something to do. In the first year of his trading, the drift destroyed him, not in a single dramatic session, the way revenge trading does. Quietly, gradually, a slightly subpar setup here, a trade taken an hour before the London close when he knew he should have waited, a position entered on a gut feeling dressed up as technical analysis, each one individually survivable. Cumulatively, month after month, the difference between a break-even trader and a losing one. And the solution, when he finally found it, was not a new strategy. It was not a better indicator or a tighter set of rules. It was something that felt, at first, almost absurdly simple. It was a philosophy. Specifically, it was the Stoic concept of horme, the governed impulse, the trained ability to pause between stimulus and response, to ask whether the impulse to act serves reason or merely serves emotion, and to act only in the former case. 2,000 years ago, the Stoics identified the restlessness that drives action bias, and they built a practice for governing it. Let me show you what that practice looks like. The Stoics were fascinated by the moment between stimulus and response, that tiny, often invisible gap between something happening and a person reacting to it. They called this gap the space of reason, and they believed that everything that separated a wise person from an impulsive one happened in that space. The concept they developed for governing this gap was called horme, translated variously as impulse, drive, or the movement toward action. Specifically, the Stoics were interested in what happened when horme arose, when the impulse to act appeared, and whether a person could govern it or whether it governed them. An ungoverned horme is what drives the trader who sees a moving candle and enters without a setup. The impulse arises, price is moving, I should be in this, and before reason has a chance to evaluate the quality of the opportunity, the order is already placed. The hands moved before the mind spoke. A governed horme is what Michael has built over 3 years. The impulse arises, the same impulse, equally strong, equally real, and there is a pause, not a long pause, sometimes only a few seconds, but in those seconds, reason gets to speak, the criteria get checked, the higher time frame gets considered, the honest question gets asked, does this setup genuinely meet my standards, or does it only meet them because I want it to? Epictetus taught this more directly than perhaps any other Stoic. He said, first say to yourself what you would be, then do what you have to do. First say to yourself what you would be. Decide before the session, before the impulse arises, what kind of trader you are, what your standards are, what constitutes a genuine setup, and what constitutes wishful thinking dressed in technical clothing. Then, and only then, do what you have to do. Execute against that pre-committed standard, not against the emotional pressure of a moving market, not against the boredom of a quiet session, against the standard you set when your mind was clear and your emotions were not involved. This is horme in practice. This is the governed impulse, and it is without question one of the hardest things to build in trading, because the market creates horme constantly. Every candle that forms, every level that is approached, every piece of news that drops, the market is a continuous generator of impulses to act, and every one of those impulses must be met with the same question. Does this meet my standard, or am I just reacting? Marcus Aurelius wrote, "The impediment to action advances action. What stands in the way becomes the way." The impulse to trade when you shouldn't, the restlessness, the boredom, the action bias, that is not the enemy, it is the training ground. Every session you sit through without giving in to an unqualified impulse is a session that builds the muscle of governed horme, and that muscle, built over months and years, is what separates the traders who survive from the ones who do not.
Let me give you the mathematics of patience, because this is not just philosophy, it is arithmetic. And the arithmetic is more compelling than any motivational speech about discipline. Imagine 2 traders. They use the same strategy. They have the same win rate on their genuine setups, 55%. They risk 1% per trade and target 2%, giving them a risk to reward of 1 to 2. On genuine setups, this strategy produces a positive expected value. Over a large sample, it makes money. Trader A takes only genuine setups. On average, his strategy produces 15 setups per month. He takes all 15. Some months he has 12 setups, some 18.
but he never takes a trade that does not meet his criteria. His monthly results are consistent, if unspectacular. Over 12 months, his account grows by 31%. Trader B takes all the same genuine setups, but he also takes 10 additional trades per month. The drift trades, the boredom trades, the setups that are close but not quite there. His win rate on these additional trades is not 55%, it is closer to 40%, because his analysis is less clear when the setup is unclear. These extra 10 trades per month, with a 40% win rate and a 1-to-1 risk to reward, have a negative expected value. They lose money on average, not dramatically, but consistently. Over 12 months, Trader B's account is down 11%, not because his strategy is bad, not because the market was against him, because he added 10 losing trades per month to a strategy that was already working. The difference between a 31% annual gain and an 11% loss is not the strategy. It is the discipline to trade only the strategy. It is the governed horme. It is Michael sitting at the screen for 4 hours and going home with a flat account and a clean journal entry. Now let us look at what waiting actually costs. On the days Michael waits and finds nothing, he pays spread and commission on 0 trades. He risks 0% of his account. He experiences the psychological cost of boredom and restlessness, which is real, but which costs him nothing financially. He goes home with exactly the same account balance he had when he sat down. What is the cost of that? Nothing. Mathematically, literally, nothing. And yet, and this is the psychological paradox at the heart of trading, doing nothing feels more costly than doing something. It feels like failure. It feels like the market is happening without you. It feels like the opportunity is being wasted. Seneca addressed this paradox directly. Retire into yourself as much as you can. Associate with those who will make you a better man of you. Welcome those who can profit you. Solitude is better than the company of bad men. Solitude is better than the company of bad men. In trading terms, a flat session is better than the company of bad trades. The bad trades, the drift trades, the boredom trades, the almost setups, these are the bad company that Seneca warns against. Their cost is not just financial. They corrupt your relationship with your own process. They teach your system that standards are negotiable. And that corruption compounds far longer and far more damagingly than any single loss. Waiting, properly understood, is not inaction. It is the most disciplined action available to a trader on a day when the market offers nothing worth taking. It is the exercise of horme. It is the practice of Apatheia in its most demanding form, because it asks you to feel the full force of the impulse to act and to govern it anyway, without the satisfaction of a trade to show for the effort.
Here's what makes impatience so dangerous in trading. It rarely announces itself honestly. It almost never says, "I am bored and I want to trade." It puts on a costume. It dresses itself in the language of analysis and discipline and opportunity. And if you don't know what the costumes look like, you will be fooled by them every time. These are the 3 disguises that impatience wears most often. Disguise 1, the almost setup. The almost setup is the most common disguise. The chart looks good, the direction is right. The level is close, not perfect, but close. The candle is not quite the confirmation you look for, but it is suggestive. It is not your A-grade setup, but it is, you tell yourself, at least a B-grade setup. And B-grade setups are worth taking, right? This is impatience wearing the costume of flexible, adaptive trading. The honest question to ask when you find yourself grading setups, when you start ranking them A, B, C, is this: did your trading plan include B-grade setups before today? Or did that category appear only because today has been quiet and the A-grade setup has not arrived? In Michael's early trading, he kept a category he called good enough. It was always empty on weekends when he was building his plan. It was mysteriously full on Thursday afternoons when the week had been slow. That discrepancy, when he finally noticed it, told him everything he needed to know about who was really creating the good enough category. It was not his analysis, it was his impatience in disguise. Disguise 2, the news trade. A major news event is approaching. Non-farm payrolls, a central bank decision, an inflation print. The market is about to move. Everyone knows it. The volatility is already building. The candles are compressing in anticipation. And you have a position bias. You think you know which way it will break. You have reasons, real reasons, researched reasons, reasons that feel genuinely analytical rather than impulsive. So you enter before the news, not because your setup criteria have been met, but because the opportunity feels enormous and the window feels narrow and the analysis feels solid. This is impatience wearing the costume of informed, decisive trading. The reality of news trading for retail traders is brutal and well documented. The spreads widen to levels that make the risk to reward mathematically terrible. The initial move is frequently a fake-out, a sharp spike in one direction followed by an equally sharp reversal. The edge that your strategy provides, whatever it is almost certainly not present in the chaotic, algorithmically dominated minutes around a major news event. But none of that matters in the moment, because in the moment, what you feel is the size of the potential move, and that feeling, that excitement dressed as opportunity, is impatience in its most seductive form. Disguise 3, the recovery trade. You've had a bad week, not catastrophically bad, but down enough that the month is now red and the weekend is approaching and the thought of closing the week at a loss feels unacceptable. Friday afternoon, the market is slow. The setups are thin, but you need one more trade, one more chance to recover something before the week closes. And so you find a trade, not because it is there, because you need it to be there. You construct the analysis around the conclusion you have already reached. You find the reasons to enter because entering is what the emotional pressure of the week is demanding. This is impatience, and specifically thumos, the rage we discussed in our first video, wearing the costume of one final disciplined attempt to finish the week positively. Marcus Aurelius wrote, "Never esteem anything as of advantage to you that will make you break your word or lose your self-respect." Your word, in this case, is the standard you set for your setups. Breaking it, finding trades that don't exist because the week's result demands them, is the moment you lose your self-respect as a trader. Not because of the money, because of what it tells you about who is actually in control of your decisions. The antidote to all three disguises is the same. It is the practice Michael has built over 3 years. Before every session, he writes one sentence in his journal. "I will trade only what meets my criteria, regardless of what the session has produced so far." One sentence, read before the session opens, returned to whenever the disguises appear. A pre-commitment to his better self made before impatience had a chance to put its costume on.
Patience in trading is not a personality trait. It is not something you either have or do not have. It is a skill. It is built through practice, through repetition, through the slow accumulation of sessions in which you chose the governed response over the impulsive one. Here are 3 specific practices that will build it. Practice 1, the session intention. Before every session, before the charts open, before the market moves, before any impulse has a chance to arise, write one sentence that defines the only condition under which you will trade today. Not a list, one sentence, specific enough that there is no ambiguity about whether a given setup meets it or not. I will trade a rejection candle at the 4-hour supply zone between 1.0840 and 1.0860, London session only. Or, I will trade the first valid order block retest in the direction of the daily trend, with confirmation on the 15-minute chart. Whatever your system specifies, write it in advance, in concrete terms, with no room for the almost category to appear. The Stoics called this proheiresis, the deliberate, rational choice made before the moment of pressure. This is the choice that belongs to you. Once the market opens and price begins to move, the emotional pressure begins. The session intention is the anchor you set before the tide comes in. Practice 2, the no-trade journal. Most traders only journal the trades they take. Michael journals the trades he does not take as well. Every session in which he identifies a potential setup and declines it, he writes a brief entry, the setup he saw, the reason it did not meet his criteria, and, honestly, whether the decision to pass was based on analysis or on the recognition that impatience was trying to take over. This practice does two things. First, it makes inaction visible and trackable. Instead of a blank page that represents a day of doing nothing, there is a record of a day of considered, deliberate decisions. The no trade is honored as the decision it actually is, not dismissed as an absence of trading. Second, it creates a feedback loop. After a few months of the no-trade journal, Michael can look back and see what happened to the setups he passed on. Some of them would have been winners, some of them would have been losers. The pattern of results, compared honestly to the setups he did take, gives him real data about the quality of his decision to wait versus his decision to act. Epictetus said, "Know first who you are, and then adorn yourself accordingly." The no-trade journal is how you come to know yourself as a trader. It is the mirror that shows you not just what you did, but what you chose not to do and why. Practice 3, the Stillness Timer. This practice is borrowed directly from the Stoic exercise of voluntary discomfort, the deliberate exposure to difficulty as a form of training. Set a timer for 30 minutes. During those 30 minutes, you will watch the market without touching anything. No entries, no adjustments to open positions, no switching time frames looking for a better angle, just watching, just being present with the movement of price without the need to respond to it. This sounds simple. It is not. In those 30 minutes, you will feel every form of impatience the market can generate. You will see moves you think you should be in. You will see levels approach and react. You will feel the pull of the almost setup. You will feel boredom. You will feel the restlessness of a person who wants to participate and choosing not to. And you will sit with it, not fighting it, not trying to make it go away, just observing it, the way Marcus Aurelius would observe it, with curiosity rather than resistance, noting its presence, noting its character, and choosing each time it rises not to act on it. At the end of the 30 minutes, the timer ends. Now you can trade, but only if a genuine setup exists at that moment. Not the setup you watched during the 30 minutes, this moment, this setup. What this practice builds over time is the lived experience of sitting with discomfort and not being destroyed by it, of feeling the full force of the impulse to act and governing it anyway. This is horme in training. This is apatheia at its most practical, not as a philosophy discussed in theory, but as a muscle worked in the specific conditions where it is needed most.
Let me tell you how Michael's story ends today. He sat for 4 hours. He watched 2 setups form and dissolve without meeting his criteria. He felt the drift, the slow, familiar pull toward the almost setup that appears when the session has been quiet. He recognized it. He named it in his journal, briefly, the way he always does when it appears, and he let it pass without acting on it. He closed his charts at the end of the London session, made his journal entry. 2 potential setups considered, both declined, reasons documented, no trades taken. And then he did something that would have been impossible in his first year of trading. He felt satisfied. Not the satisfaction of a winning trade, not the satisfaction of profit booked or targets hit, the quieter, deeper satisfaction of a person who was tested and did not fail, who felt the pressure and held to the standard, who chose for the 100th time the governed response over the impulsive one. This is what patience feels like when it has been practiced long enough to become natural, not the tense, effortful patience of someone white-knuckling through a quiet session. the easy, confident patience of someone who has learned through repetition that the market will always bring another setup, and that no single missed opportunity is worth the cost of a compromised standard. The Stoics called this state euthymia, tranquility of mind, not happiness in the conventional sense, not the high of a winning trade or the relief of the recovering loss, simply steadiness, a mind that is the same at the end of a quiet, tradeless session as it is at the end of a day of clean, profitable execution. That steadiness is the foundation of everything in trading. It is what allows you to execute consistently over months and years rather than burning brilliantly for 3 weeks and collapsing when the inevitable drawdown arrives. Epictetus said it simply, as he always did. Seek not that the things which happen should happen as you wish. Wish the things which happen to be as they are, and you will have a tranquil flow of life. Wish the things which happen to be as they are. The quiet session is what it is. The absent setup is what it is. The flat day is what it is. Resist none of it. Fight none of it. Demand nothing from it that it is not offering. And when the genuine setup finally arrives, as it always does, you will be rested, clear, and ready, not depleted by 4 hours of forcing something that was not there, not distorted by the emotional residue of drift trades taken out of boredom, just present, just prepared, just ready. That is the psychology of waiting. That is why the best trade is often no trade at all. I will see you in the next one. Confine yourself to the present. Marcus Aurelius.